Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders, and our website is www.stochastic-macd.com. For all trade, we use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Very, very important. All right, let's get started. The title of this video is How to Trade the Australian Dollar, US Dollar Currency Pair. All right. In this video, we're going to share with traders, tips and tricks about the Australian dollar, US dollar currency pair, all right? The correlation between this currency pair and other currency pair. What influences this currency pair? For instance, the commodities are influencing the Australian dollar, US dollar currency pair, okay? Which economy news we must pay attention to? What mindset should we adopt, when we are trading, this currency pair? We will highlight also key levels, and also talk about the market pattern, the current market pattern, and try to forecast, what is likely to take place with this currency pair during this year, 2014, all right? All right? Let's get started. Today is the 26th of April 2014 and the time in London is 15 p.m. Happy Saturday to you all. How do we trade the Australian dollar and the US dollar currency pair? So the first thing we want to understand, what is this pair? So we are comparing, the Australian dollar to the US dollar. So what usually takes place if the economy in Australia is booming, is strengthening, we will expect, the Australian dollar to be, also strong. But if the economy in the United States, like we see in 2007 to 2008, is struggling, during the financial crisis, the dollar was going down. So during that time, the Australian dollar was strengthening and the US dollar was, going down. So we will see this pair, because it's a comparison, we will see this currency pair going up because the Australian dollar was going up while the US dollar was, going down. But if the US dollar is going up, is strengthening, or if the US economy is strengthening, and on the other hand, the Australian economy is struggling a little bit, we will see this currency pair going down, because if the dollar is strengthening and the Australian dollar is weakening, the Australian dollar US dollar currency pair will be going down. All right. I want you also to understand that the Australia is is Asian, currency pair, is close to China. So the Australian economy is directly, influenced by the China economy. So we see that when China economy was booming strongly, in 2010, 2009, 2011, the Australian economy also benefited from that, with the export and the import and the business they were doing with China. They are closest partners. They were, the economy, while the economy in China was strengthening, the economy in Australia also was strengthening. But so when we are trading the Australian dollar, US dollar currency pair, though that has nothing to do with China, we should keep eyes on the China economy. We also know that in Australia, they produce a lot of commodity. Gold is one of them. Many other commodity are produced in Australia. The economy in Australia is dependent on the commodity market. So if the price, we can check the price of the commodity, is the price of the commodity likely to go up? If the price of the commodity likely to go up, especially gold and silver, there's a high chance that the Australian economy will benefit from that, because they sell those materials, they produce them, so the Australian dollar will be strengthening. So though we are not trading commodity, we still need to pay attention to the commodity market if we are trading the Australian dollar, US dollar currency pair, because the Australia is one of the biggest producers of commodity. Very, very important. But when we are talking about commodity, one key element we must focus on is the price of the commodity. It's not the quantity, but the price of the commodity. Is it going up? Is it likely to go up? Or is it likely to go down? What was happening between 2009 up to almost now, a lot of central banks, especially the Federal Reserve of the United States, was busy printing the dollar. In Great Britain, okay, the Bank of England was busy printing, okay, the sterling pounds, okay, and we also know that all over the world, okay, they were busy printing money. So by printing money, you are devaluing your currency. So the Americans were devaluing their currency, the British were devaluing their currency in Great Britain, in London here, all right? So their currency was going down. If one currency is devaluing, okay, what usually take place, the rich people, all right, the money managers are busy protecting, okay, their clients' assets. So currency going down is not good for their client. They will transfer their funds to other currency where they are likely to gain more interest on their money. So when they are printing money, the interest rate, if you put your money in your bank, you don't earn money, much interest rate, okay? 0.5, 0.3, it's not nothing. So the money manager that are managing the asset of their client has to move some of their funds to other country where they can earn better interest. So while in 2008, 2009, 2010, 2011, the American government, the British government were busy devaluing their currency, which means the interest people will earn on their saving were very low. The fund manager were moving their assets to, okay, Australia, all right, and also in Japan, because when, okay, yeah, this is very important for these videos. I will get back to the technical part, so stay with us. So we will talk about the key level and also what we need to pay attention to if you are day trader, okay, and also if you are swing trader. Now this is about the investors and what we need to understand if you are trading this currency pair, okay. So if, okay, the inflation going up, or if a country is printing money, or if a country is devaluing their money, okay, the investor prefer to transfer their money. They don't want their asset to be in that currency. They will buy real asset. Real asset, we are talking about buying houses in another country when the interest is high, buying commodity like gold and silver and store them to protect their wealth. Because as the value of the money is going down, the money itself is being put in a bin, or okay, so to speak, all right, they will try to protect their asset by buying a real asset that protecting their wealth, by buying real asset like gold and silver. So this is good for the Australian economy if one country is devaluing them. So right now in Japan, they are busy trying to devalue the yen. The Japanese, okay, money managers and those who are rich will transfer their gold in real asset in another country when they are likely to get more interest, putting more pressure on the yen in relation to other currency. So from 2008 to 2011, even up to now, the money printing was going on big time. It reached its peak point in 2011. So from 2012, the Federal Reserve was saying to people, okay, it's time. We're going to stop printing money. We're going to stop printing money. Guys, listen, we're going to stop printing money. For God's sake, that's now we're going to stop printing money. So because of those reasons, okay, we see that the Australian yen, the Australian dollar, start weakening, okay, start going down. This currency pair, Australian dollar, US dollar, start going down, because if the money printing is stopping, the asset that move into the Australian dollar will now return back home, okay? You understand? So they are the money managers know that, okay, soon the Federal Reserve in Great Britain, the United States will start, okay, putting the interest rate up, which means they're going to start earning more interest on their money, on their asset. They will pull the asset back home again. So the inverse will take place, which means the bullish trend that we see for this Australian dollar, US dollar currency pair is coming to the end slowly by gradually, unless, repeat, unless the Federal Reserve see another reason to continue to print the money and then game on again. So the fundamentals, the economy news will influence the currency market. enough of my blah, blah, blah. Let's continue with our technical analysis. So one thing we must understand that the Australian dollar, US dollar currency pair is what we call a commodity currency pair. So though we are not trading commodity directly, the commodity price will influence the Australian dollar, US dollar currency pair, especially gold and silver. So in fact, when we are trading the Australian dollar, US dollar currency pair, we are indirectly trading, all right, the gold and silver. So it will be nice to pay, or essential for us to pay attention to what's happening to gold and make a smart decision for long term, because we know that this commodity are positively correlated to the Australian dollar, US dollar currency pair. So if you trade this currency pair, know this information down, be aware of it. The next thing that I've already talked about is that China economy is connected to the Australian economy. So pay attention to the China economy. So economic data that have been released in China will have direct impact on this Australian dollar, US dollar currency pair. So you may say to me, George, what China got to do with it? But that's the reality of the market, okay? So that's very important. The economy in the United States, the Federal Reserve decision regarding the interest rates, okay, and also the job data, okay, in the United States will influence this currency pair. So you want to know. So in fact, you are trading international currency pair, all right, so to speak. The next thing, traders who are trading the Australian dollar, US dollar currency pair, I've mentioned that we will talk about the correlation between currency pair. This is one point. By the way, there was a trader that asked me an excellent question about currency pair correlation. Some traders are trading Forex, but they don't know about the currency correlation. Go to www.youtube.com, type in, currency pair correlation by George Trio, something like that. That's the title of one of the videos that are posted on YouTube. So put in correlation between currency pair by George Trio. It should pop up, okay? You will read, you can watch the video and learn from it. The Australian dollar, US dollar currency pair is positively correlated to the Euro USD. The Euro dollar currency pair is moving in the same direction like the Australian dollar, US dollar currency pair. So if, for instance, the Euro dollar is going up, there is a high chance that the Australian dollar, US dollar currency pair also will go up. If the euro dollar is going down, there is a high chance that the Australian dollar, US dollar currency pair also will go down. But this is not true 100%. This is true up to 70% of the time. You will see this positive correlation between this currency pair. So the best approach for Forex traders is that we pay attention to the Euro USD. If we receive, for instance, a gorgeous, beautiful buy signal for the Euro USD, we will check whether the Australian dollar, US dollar currency pair also give us the same signal. But we do not want to forget the economy news. One thing you should not forget is this. If you are swing trading this currency pair, all right, or you are day trading this currency pair, remember sometime late in the evening in London, at 2 a.m., at 3 a.m., at 5 a.m., when you are busy snoring, on your bed, so, all right, this will make you laugh, all right, there are major economy news that are released in Asia, because Hong Kong will open at 2 a.m. London time, or when a lot of traders are sleeping, or some of the traders will stay awake and trade, but this late night economy news can mix up some of the trade if you leave your trade open and you do not bother to check the economy news, concerning, the Asia economy. Especially the economy news in China will also influence the Euro USD. Why? Because Euro is busy, exporting a lot of goods to China, and there are business partners, so to speak, all right? So be aware of it, So Euro USD positively correlated to the Australian dollar, US dollar currency pair. The best approach is to keep eyes on the Euro USD and take the same signal with the Australian dollar, US dollar currency pair. If you, for instance, you are selling the Australian dollar, US dollar currency pair, but the Euro USD give a bullish signal, in that case, you need to be very careful unless you have fundamental reason, which means economy news, to support that divergence between the Euro USD and the Australian dollar, US dollar currency pair. So remember the late night economy news during the Asia session. Where do you get economy news data? Go to www.forexfactory.com and check the economy news. We can go there now, and I want to show you before we go to the technical analysis. We're going to do that, okay? I promise we're going to do that. So stay with us, okay? So next week starting, okay, tomorrow, all right? In fact, today, 27th to the 3rd of May. So we want to check the high impact news or the economy news that are relating to the Australia. So you will see here, Forex Factory done a very good job. You see the country, this is pound, euro, pound, dollar, Canadian dollar, New Zealand dollar. One more thing, the New Zealand dollar, the economy of New Zealand, because they are partner to the Australia, will have some impact also on the Australian dollar, US dollar currency pair. Very important. So for next week, at 9:30 p.m., that's 2:30 p.m. in the morning, 2:30 a.m., no, not p.m., that's 2:30 a.m. in London, private sector credit, okay? That's on Tuesday, the 29th of April. So 2:30 a.m., while you are sleeping, and in fact, at 2 a.m., we have one important news, high impact news for New Zealand. This will have some impact on the Australian dollar, US dollar currency pair. 30 minutes later, at 2:30 a.m. London time, private sector credit. Okay, you see this is here, the Australian. AUD, that's the Australian. But here we have New Zealand also. If you look down more, there are more data, okay, relating to the Australian dollar. And you want to know when they are due. It's not that you are trading the Australian the news itself, but you want to know when they are due and which impact they will have on the market, so you may prepare yourself carefully, okay? So at 7:30 on Wednesday, the AIG manufacturing index, that's midnight 30 in London, okay? Midnight 30 in London. This is when this news is due in Australia, all right? So this will also have impact. After that, we have also some news here, you see, for China, manufacturing PMI, a very high impact news, will definitely influence also the Australian dollar, US dollar currency pair. And here it is again, another one, the Australia, okay? And you will see. By the way, before I forget, next week is the first week of the month. For traders that are trading Forex, which news we should pay attention to? The first week of the month, we pay attention to the first Wednesday and the first Friday, yes or no? And the first Wednesday is what are we looking for? The ADP non-farm employment chain at 1:15 p.m. London time, that 8:15 a.m. Eastern time. High impact news, ADP non-farm. So don't forget it next week, okay? If you see a tall candle, all right, in front of you, you should know what is causing it. And as the week is beginning next week, you'll see professionals start adjusting their portfolio, preparing themselves for this very, very important. In fact, if you are new to that, I recommend to you that you do not trade the first week of the month. Just go on holiday or play golf or do something else. All right? It can be messy. So be aware of it, okay? So here it is, ADP. On the first week of the month, first Wednesday, pay attention to that. And on Friday, the economy news, which I talk about 100 times, the non-farm employment change here at 1:30 p.m. London time, that's 8:30 a.m. Eastern time, high impact news. So these are the things we need to know. So you go to www.forexfactory.com, click on calendar, and you'll see all this news. And the Australian dollar, you want to know the New Zealand dollar, and in fact all the economy news, so you can make excellent decision. We are talking about how we can trade the Australian dollar, US dollar currency pair. Let's move on to the technical part of this recording, but before we continue, I want to check how long I've been talking to you. That's 90 minutes. Okay, not too bad. So we see that this currency pair was going up. Okay, you see the channel, the blue channel. From 2009 up to 2012, it was in a rising channel, displaying higher lows and higher highs. But somewhere around mid-2012, it started displaying what? Okay, lower highs and lower low. So now we have this, in fact, what I will do, I will color it into orange. We have this declining, okay, trend line. pay attention to the orange line here, okay? So what I would say to traders, we on a monthly chart, okay? As long as, ready, sir? As long as we stay below this orange decline line, priority to sell signal. Now, trader will say, just say sell. Priority to sell signal. When we are buying, we have to be very careful. Doesn't mean that it cannot go up right now. So this is what I will say to you on a monthly chart. On a monthly chart, we see now a bearish channel forming. So professional will prefer it. So you see first time, second time, they will prefer it to rally out to the edge of this orange line here. So there is a high channel. You may go there. But there is something else you need to know. Okay? Let's go to the yearly chart. On the yearly chart, this is 2013, the red one here, and you see that it was bearish, completely bearish, because people start selling it last year. Because the Fed were busy saying that the central bank were busy saying, oh, soon we'll stop printing the money, or we'll stop quantitative easing, all this blah, blah, blah. And the market starts selling, okay, the commodity currencies and start pulling the asset back home. All right, you remember what I said before? So they start selling. So because of those, knowledge, professionals were selling. They were right to sell it. Okay, they were right to sell it. It's beautiful to sell. Okay, so they were selling. So this year has begun. You see that the green horizontal line here. So the key level we must know for the Australian dollar. The high of 2013 is at 105.98. The low of 2013 is at 8820. The next key level, the median line of 2013 is at 9717. Around that zone, not exactly, the median line is around is in a zone of 9717. All right? So now, the price this year, 2014, did open near the low of last year. All right, so it will be bearish. It would have been bearish if it couldn't go back above, because it did below the green horizontal line. That's the low of last year. The price went below that green line. If you go to the monthly chart, you'll see it. Okay, this year you see it did below the green line, which is the low of last year, but quickly recovered and went back above it. In fact, it's a beautiful, okay, candlestick pattern here. You see. All right, and then boom. So people are buying now. But it's not completely bullish because the price managed, okay, to recover quickly below the low of last year and went back above it, okay, even went to the opening, above the opening price of last year, and continued to display higher lows, higher high, okay, this year. Okay, you see this year, 2014, January 2014, February 2014, and start going up. It's not completely bullish. Professional will be watching the media line. So if you are buying this currency pair, be careful when it's approaching the level of 9717. That's all you need to remember. Though it's recovering after going below the low last year, start going up. Yes, this can be a bearish rally. So if you are buying it, remember the level of 9717. That's the media line of last year. In fact, let's go back to the yearly chart. Okay, that level is the black horizontal line. Is almost equal to the high of 2008. You see, this is the candle of 2008 is almost equal to the high. The high of 2008 is at 9608. All right, so it's in that zone. Okay, so remember that. So while it's going up now, we need to watch the level of 9717. If you are buying until you reach that level, come out. Wait for it to go back above the 9717, break above, retest, turn around. All right, then you start buying again. And the next level you watch, if you find a support above the median line, is 105.87. 105.87. That's the high of 2013. But, ladies and gentlemen, that's the red horizontal line here, okay? One thing you must understand, the fundamentals, okay, influence the technical. If the Federal Reserve United States continue to start, okay, increasing the interest rate as they promise, I don't think they're going to have the courage to start doing it now. We have to wait till 2016. That's my personal view. You may feel free to disagree with me, but that's my personal view. They're not going to, they are talking about it, but I think they are not able to do it until 2016. All right, because they're going to mess up a lot of families that are struggling to pay their mortgage. So that's my personal view. Okay, so if it's going up, watch the level 9717. Another key level that you must not forget is the short-term equilibrium price level and the long-term equilibrium price level. I have been talking about these two levels for some time. So if you don't know what it is, go to www.youtube.com/JoTrio. Watch our video that I call How to Trade the Euro USD, How to Trade the Dollar Yen. You will hear me talking about the short-term and the long-term equilibrium price level. All right, but I don't want to dwell on it in this video. I will just give you those key level. For the Australian dollar US dollar currency pair, something interesting is happening. The short-term equilibrium price level is equal to the long-term equilibrium price level until the short-term equilibrium price level will change, because we know that the long-term equilibrium price level will remain in place for a long period of time, while the short-term equilibrium price level may change, okay, after 2 weeks. All right, but as I'm speaking to you today, the short-term equilibrium price level is exactly equal to the long-term equilibrium price level. So the level we are talking about is a 9217. 9217 is the short-term equilibrium price level. Is also the long-term equilibrium price level for this Australian dollar US dollar currency pair. That's the pink horizontal line here. Okay. So do not forget the short-term equilibrium price level. Apart from every other key level that you have heard about, the most important key level that you must not forget, is the short-term and the long-term equilibrium price level. We are talking about intrinsic value of an asset. Okay? All right, do not forget that 9217, 9217. So traders say we can sing it. I say, yeah, if you want to sing it, you don't want to forget, sing it 9217. Okay, so let's go back now to the monthly chart, and see what's happening. So I'll share with you why you need to pay attention to, because we want to start from the higher time frame, see the bigger picture, and then we want to apply what we call the trading drill. So we see the setup on the higher time frame. Now we go to the signal time frame, and then we wait patiently for a low risk entry point. If the risk is too high, we'll stay out. If the signal fails, we'll come out. Okay, very simple. All right. So we don't want to fight the market. Okay. So on this monthly chart, we see that we have now a declining channel, which is the market pattern. So we don't want to fight the market pattern, but we know that as the price going down, there are mini cycle, there are mini bullish cycle. Price going down. Okay. The bearish move will be stronger than the mini bullish cycle. So the move that I'm talking about now, that there's a high time you may try to see to retest the level of 9717. If it continues to be bullish, okay, that's a different issue. But right now the price is hanging on the short-term and long-term equilibrium price because they are equal. That's why it is now. All right. So do not forget that. So the market pattern is bearish, but there are mini cycle, mini bullish cycle, which are the rally. This is a rally in a downtrend. So I say to you, priority to sell signal on the edge. If you go now to the weekly chart, what do we see? The price form a double bottom at the low of, are you with me? On the low of 2013 on the weekly chart, and it start going up. But now it breaks above, okay, the long-term and the short-term equilibrium price level, and it is retesting it. But I say to you, if you are buying, okay, this is a bullish setup, you will use a multiple time frame trading method to manage the trade, because sometimes trader will buy and the price will go down. If you don't use a multiple time frame trading method, the price will continue to go down, and you'll be crying and say, what is he talking about? So it breaks above the long term and short term equilibrium price and retesting it here. This is on a weekly chart, but it is still bearish because the market pattern is bearish. And if the market pattern is bearish, as the price going up, there is another group of traders that are busy selling you down. You don't want that. That's why it's better to trade in the direction of the market pattern. You don't want to fight the market. So when you are buying it, there is another group of people busy selling you down. You're under pressure. And if they overwhelm you, you have a losing trade. That's why we don't want to fight the market. So in this scenario, the market pattern is bearish. So we want to give priority to bearish signal. But if we are buying, we need to keep our two eyes wide open, all right? So we don't, fight the market, We don't want to fight. So we take a very tiny risk, we control it, we keep eyes on it. We don't fall asleep, We don't forget it, Because we know that we are in a contra trend, That's what I want you to understand. It may go steadily and go all the way to 9717. It may continue to roll it down. But right now, it breaks above the equilibrium price levels and retesting it here. And after display a double bottom on the weekly chart. But the market pattern is bearish. You see now, it makes sense. And it's also powerful. Let's go to I'll go directly to the 4-hour chart and see what's happening there. So on the 4-hour chart, no big difference. You can see here what I was talking about. Now it went blah, blah, blah. It breaks above. You see on the 4-hour chart, the pink line, the equilibrium price level, break above. Now it was retesting here on the edge. All right, be careful. So on the 4, though I said to you that, so on the 4-hour chart, we can draw again a very tiny channel. So right now it's in that smaller channel. Blah, 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 blah. So careful, You see now, smaller channel like this, But the channel again is bearish on the 4-hour chart. So it will be better if, it's up to you how you want to do. It's up to you if you want to do. But right now, the way things stand, this will be a better place up in this zone to find a support up here. But if you see a bullish signal around the equilibrium price level, it's up to you. But remember, the smart money is giving priority to sell signal. That's what they're paying attention to. So be very careful if you're buying this pair, I hope you have learned something from this video also about, the Australian dollar, US dollar currency pair, and we put into use, my apology for this, this is not what I want to show you, and we put into use, to make excellent day trading, swing trading, and investment decision. We are the TSTW SYS 008 traders. Speak to you soon.